Now, most homeowners and real estate investors worry about what the value of their properties are today, but maybe a better question is, where will property prices be 25 years from now?
Get the crystal ball out.
It's a long way to think ahead. The good news is that, believe it or not, the median house price in Sydney could be over $6 million, and the median apartment price in our harbour city could be close to $3.5 million in 25 years' time. Now, before you say,
no, that can't be.
it's already unaffordable. Let's have a chat with leading property expert Michael Yardney, CEO of Metropole Property Strategists, to explain where this figure came from. Michael, good afternoon to you. Great to see you as always. Now, it is a lot of crystal ball gazing, but these numbers you're not plucking them out of thin air, are you?
No, Sophie. What happened was Aussie Home Loans went back with CoreLogic data to see what property values were 25 years ago, and then extrapolated and said if the same was to happen again in 25 years, over the next 25 years, what would property values be? Interestingly, looking back 25 years, Australia's real estate values went up 412%, on average about 6.8% per annum. Melbourne did over 8% per annum, so did Sydney. In other words, Melbourne and Sydney property values doubled every 7 years or so, and for other big capital cities, on average, they doubled every 10 years. But there were, look, who wouldn't have liked to buy the house their parents bought 25 years ago, Sophie?
Yeah, well, we're looking at that graph now where the line just does a steady climb all the way up, and in times like this when the market is going backwards a little bit in certain areas, it's good to keep an eye on a line like that, isn't it?
Well, I think you've got to have some perspective. There were some other really interesting trends that came out of it. So could I quickly go through those with you, please?
Yeah, please.
We'd love you to.
James, what it showed was that the average Australian who owned a house became much wealthier. There was a great wealth effect. In other words, if you bought a house 25 years ago, it doubled in value and doubled in value again and doubled it again. It went up 412%. But your mortgage was still at the old dollar value. So the average Australian has become very wealthy just by owning real estate. The other thing it showed was that on average, mortgages went up at much the same rate as house prices did, but because the mortgage rates went down, interest rates are much cheaper, affordability is cheaper than it was 25 years ago. Having said that, it's harder to get a deposit, Sophie.
Yeah, we're just looking at the numbers on the screen at the moment of where things have gone up in the past 25 years, and it is quite extraordinary to look at what the median values are now compared with what they, how much they've changed by.
Sure. So it is not as hard to service your loan, but it's much harder to get the deposit for it. The other interesting trend from these statistics showed that there's a smaller group of first home buyers. First home buyers in the market dropped from about 22% to about 15% of home buyers. But interestingly, investors, there are more investors around now than there were a couple of decades ago. Remember, they reached their peak when we were discussing these things on the show a couple of years ago, when about 50% of every property in Sydney was bought by an investor, and that's unsustainable. So we're now in the next stage of the cycle, which is just catching its breath.
You know, these figures we've been looking at, they're showing how much the property value has increased by each year, aren't we? So when we're looking at units that have gone up by $15,000, that's every year for 25 years. So that certainly shows that, buying and holding is a pretty good strategy when it comes to property if you're buying in the right areas.
Very much so. So at the moment, when all the news is about property values going down, auction clearance slower, maybe property values are going to drop, unless you're about to sell your home or buy a new one, it really, really doesn't matter. Residential real estate's a long-term game, so don't get scared off by the news. Just hold on if you've got a well-located property. And if you're ready to move up, buy a new house, move up because your family circumstances have changed, don't be scared what's happening in the market. Just get in and then let the market do its job.
And for some people, we talk about how to get into the market, Michael, and of course apartments, are going to be cheaper than a home and get you closer to the city or the action or your employment or your schools. But when you're looking at that figure of the unit, we've got it up now, Melbourne, 18,000 each year, and Sydney, 23,000. It's quite big figures. I mean, they are the two, leading population centres as well. But you're watching the other cities coming up, pretty strongly as well, aren't you?
Well, all around Australia, values of properties have increased. economy's doing well, and in general we live in 5 big cities. We're different to other countries, and a large percentage of Australians own their own home, and they're not going to sell up when mortgage rates go up or the economy goes down a bit. It's a very different culture in Australia. One of the other interesting trends over the last 25 years is how we live and where we want to live. More and more people are living in the capital cities, and as you said, James, in the 2 big superstar cities, Melbourne and Sydney, because that's where the jobs are. We're no longer a manufacturing country. It's mainly service industries that's driving us, and they're located in the 2 big cities. You're right.
Now tell us about when you bought your first home, Michael. Is this kind of where you're coming from? Are you a good case in point here?
Well, I bought my first investment in the early 1970s. I went halves with my parents because I couldn't afford it. Now, that's interesting because that's a trend that's happening at the moment now, isn't it, where the bank of mum and dad helps people get into the market. We paid $18,000, got $12 a week rent, and we were really excited. And what happened was the Whitlam government came into power in the early 1970s, inflation shot up, and the value of my property went up. So it went up and it gave me the equity to buy another one. Interestingly, I sold it. I ended up selling it back, my half, to my parents for half of $32,000 because I thought I needed to sell it to buy my family home when I got married. Bought it back from my mum in the early 90s. Pam and I bought it for $250,000.
Wow.
I've since pulled down the old house, built 2 new townhouses worth over $2 million. $18,000, $2 million. Now, that was a long time ago, though.
It is, and it's a really interesting point that you made, Michael. When you bought a property with your parents, it's because basically then you couldn't get finance when you were a young lad, and now it's almost coming back to that reason for different views. Young people are getting money quite quickly and credit's being given easily, but now APRA's slowing it all down with investment. So it makes sense for families to be financially getting into the market together.
It is, and in fact, it's actually the deposit gap that's making it hard. So a lot of parents are helping their kids with the deposit gap. I hope my kids aren't watching and listening to this at the moment.
They should be watching, Michael. This is such
I
a
hope my parents are, yeah.
Now, what's the figure we got?
So let's have a look at what would happen if you mentioned this off the top of the program, but the Aussie Home Loans has come up with some numbers as to if we were to extrapolate it out, if we were to say, look, you know, the last 25 years could repeat themselves, what would property values look like?
Sure. Well, if the same happened, and it's not going to happen, but if you think about the last 25 years, look how many prime ministers we've had recessions, we've had good times, we've had a global financial crisis, we've had wars around the world, but despite all that, it all happened. So even though the next 25 years will be different, still, it's going to be the wealth of the nation and the population growth that's going to underpin property values. And Sydney property values are going to be about $6.3 million, and Melbourne property values $5.8 million, Canberra $2.9. But can I say, at the turn of the last decade, at 2010, I put out a press release doing exactly the same, saying this is what happened in the last decade, and if property values keep increasing, Sydney median prices will be $1 million in 2020. They got there much, much sooner. Yes. So these are interesting predictions, and all it means is that residential real estate is a great form of wealth storage, whether it's your own home or an investment, Sophie.
Well, we just heard during the week, I was actually down in Melbourne for work, and I was listening, and the figures have been reached already of 25 million. We're nearly there for the population of Australia, and that wasn't, I think we're like 5 years earlier than it was expected to be, something like that. And they've been talking about why and what to do, etc. But it's the reality. We live in a damn good country, and lots of people want to come and live here. And also, you know, birth rates, etc. It's going to be pushing these figures, isn't it?
More people want to come to Australia than we allow in, and we're going to lower the immigration a little bit if some of the politicians get their way, but that's fiddling around the edges. Australia has got a business plan. The government has got a business plan of doubling our population in the next 40 years or so. If you think about it, Melbourne's population is one of the fastest growing populations in the developed world. We're growing at 2.5% per annum, which means in the next 4 years, 10% more people are going to live in Melbourne. In the next 5 years, 10% more people are going to live in Sydney and a bit less in the other capital cities. Where are we going to put 10% more cars on our roads? Where are all these people going to live? That's what's going to underpin our property values, and more of them are going to want to live close to the CBD and close to all the amenities. If they have a choice, that's where they're going to want to live, and if they can afford it, that's where they're going to trade their backyards for balconies and courtyards. That's another big trend that study showed. The way we live, our cities have become more dense, and just look what happens to big cities overseas. The same is ahead for all our capital cities in Australia.
Well, it's a problem that a lot of cities would actually like to have in some international centres. So, Michael Yardney, thanks once again for your insight and your crystal ball gazing. Always a pleasure. We'll see you again soon.
Let's come back in 25 years and see if I was right.
Yeah, we'll still be here, I'm
We
sure.
won't age a bit, will we? Thanks so much, Michael.
All right, we're going to take a quick break now. When we come back, we're heading to Neutral Bay for a preview of our next live auction, and we're going to go back to Richmond to watch that auction unfold live.